Professor Moneypig Trading, a former PhD job researcher and data scientist and trader. Today we're going to talk about the Amazon Prime Day 282% swing trading review, and today is June 30th, 2021. So in case you haven't checked us out on Discord community, feel free to check us out at www.moneypigtrading.com. Feel free to reach out if any questions. And we also have Twitter, YouTube, Instagram. They're all MoneyPig Trading. Make sure to follow us and like this video. That will help our channel tremendously. And we'll get the latest content as well. So in the last Amazon video, we actually mentioned the past 10 years, Amazon moves up on average 22% every single year between March 29th and July 20th. And that's 100% reliable seasonality. And also we also mentioned that in the past, actually not 10 years, in the past 5 years, since the Prime Day only started back to 2015, Amazon moves up on average 12%, translating to the current day price. That will be $400 per share. Every year, 3 weeks ahead of the Prime Day. And since the Prime Day this year is back to June 21st to June 22nd, that's why we entered the Amazon swing call options early June. And we successfully captured this round when Amazon was traded at the 200-day EMA support, 32.20. We entered the Amazon call options and successfully captured this trend right at the Amazon Prime Day. And on Discord community, we also update on Twitter, Instagram, that we actually exit this trade right after Prime Day when Amazon started to pull back down. Right now, we don't hold any Amazon call options and vertical spread, but just holding some Amazon stocks. This is our Discord community alerts on June 8th. On the left side, we actually issued the alerts. We actually added the contract gradually. The July 16 expiration date, 3,600 Amazon call. Our average price, enter price, was 9.8. And June 21st, based on the previous daily chart, we actually exited all of our position, the last position at $30 per contract. In total, the average return is about 288% since we closed a bunch of contracts at $40-ish per contract. We also update on Twitter and our Instagram, again, both MoneyPig Trading, about our exit, and some members are making decent profits. However, we do notice that the issue is, we share this trading idea, but the problem is, like, Twitter continuously deletes some of our tweets. So just sharing some trading ideas across different social media platforms, a little bit challenging. So just feel obligated to make this update video just to update our thoughts and our action. Like we mentioned, Amazon always run into Prime Day, and that's 3 weeks ahead of the Prime Day. Amazon run up again in 2021. And same thing we mentioned in the last video, same thing happened back to 2020 when the Prime Day was on October 12, 13, and Amazon started to move up before Prime Day. So definitely a very interesting trade. And I know some people reach us out on social media that, oh, what if I'm still holding the rest of the Amazon contract, which is July 16, 2020 and 3,600 call. Just again, we're not financial advisor, but just really quick, our thought is right now you have to look at the theta, which is a Greek letter. That means how much time decay your contract will have. This is the July 21st, sorry, I screenshot the 3610 call. Should be 3600 call, but it should be pretty much the same, the theta. You'll see the theta will continue to go higher. That means your contract will decay more and more because the expiration is coming up. Usually in the last 1 week of the expiration, the contract decay will be really bad. So I always sell the swing trading position 1 week, at least 1 week ahead of the expiration day. If I'm still interested in that underlying asset and I look bullish or bearish on that particular asset, I will roll over to a more longer dated call or put option. So in this case, right now, the option contract is decaying. But if Amazon start to push back up, like here, it pushed quite a bit, like what we're seeing right now, and sideways consolidate for about 7 business days, and then 4-day, 8-day EMA cross and push into the earnings. Very likely Amazon could still happen, and kind of holding the 3,400 pretty well, as long as we can confirm the 3,400 being held and 4-day, 8-day EMA cross. Very likely we're going to push up to the July 29th earning. But also have to remember Bezos, the Amazon former CEO or current CEO, former CEO after July 5th, he's going to step down and fly into the space. anything happen could potentially affect the Amazon price quite a bit. 60, if he successfully come back, that potentially could be a catalyst for Amazon stock as well. So definitely one thing to be aware of. And also on July 2nd, Friday morning, there's a very important June employment data. That data is showing better than expected. Probably the bond market is going to panic, push up the 10-year Treasury yield, TNX, and that might lower the growth stocks. And if that's the case, we'll have to see if Amazon again will hold 3,400 or not. If hold again, very likely or possibly, Amazon going to push out into the earnings. However, the earnings on July 29th, so you might, if you're only in July 16th, you might not have enough time to wait until earning for Amazon to push out. So possibly if Amazon still gets sideways consolidation like this, you can partially stop loss, work stop loss Friday or next Tuesday. Remember, July 5th is Monday, is a federal holiday in the United States. Well, the other more complicated way to rescue this trade is to use a butterfly spread, which is betting on Amazon will be sideways consolidating. If on the expiration day your butterfly spread, the Amazon stock is still sideways consolidate in between your butterfly spread price, then you're gonna max out that butterfly spread contract and get a pretty decent profit, and in a way hedge your current naked call options on this Amazon July 16 3,600 call. Again, we take out all the profits already. Just kind of remedy if you're still holding any of them since Amazon pulling back. But usually recommend this naked call kind of swing trading option. We always take like half of the position at 100% or 1/3 of the position at 300%. So the rest of the position will be free ride, right? Like even they drop to 0%, you're still going to be break even. And then we continue to take profits after 100%, take out half. Then take more on the top and show any sign of weakness. We kind of have like a trailing stop, so we always have the stop above the entry price for making money on that option contract. So even the stop pull back, we'll just stop loss and we'll above the entry price. Then we'll always make money, right? So that's a safer way to gradually take position instead of waiting for the target price, which was 35.05, which was hit. The 35.50 was never hit for XYZ reason, which happen all the time, right? We just don't have control from the market. Otherwise, we'll be so rich anyway. So yeah, using this Amazon contract, we actually have a small account challenge on the right side. On May 5th, we have $1,578. As of today, it's actually traded at $1,688, which is about 994%. One of the reasons this account is growing so fast is that Amazon, we use the July 16 3,600 call, and when we make the screenshot, it was traded at $30, and just this count trade make us 6,000 this account. And some of this 3,600 will actually close at 40. So just by this trade, this account almost make $10,000 on this trade. So pretty nice, and some of our Discord member make decent money. This lovely member actually made $12,000 with just 3 contracts. And the other member actually made about $2,800 with just 2 contracts of Amazon swing call. So if you're interested in our Discord community, make sure to check us out on www.moneypigtrading.com. Twitter, YouTube, or MoneyPig Trading. Make sure to follow us. And thank you for watching. Any question, feel free to leave a comment down below or reach us out at www.moneypigtrading.com. See you next time for the next exciting swing trading opportunity.